Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally lower this morning as investors remain focused on the conflict in the Middle East. Israel Prime Minister Benjamin Netanyahu said on Thursday that his country is assisting the United States, quote, in intel and other means, end quote, to help reopen the Strait of Hormuz. Currently, benchmark ICE Brent crude oil is trading above $107 a barrel. Let's spring into action and see what else is on tap this hour. Tax season is in full swing, meaning companies like NYSE-listed CBiz are in focus. The firm's national tax leader will join us to explain how businesses are navigating new rules and legislation like the One Big Beautiful Bill. Meanwhile, I was in Orlando, Florida earlier this month at the 28th annual ICR conference. An executive from NYSE-listed Penske Automotive Group told me how the firm is investing for success when it comes to customer satisfaction. And at 9:30 Eastern, Janus Living will ring the opening bell as it celebrates its initial public offering here at the stock exchange. Following the price discovery process, the company's shares will begin trading under the ticker symbol JAN. And earlier this year, industry leaders gathered at the 28th annual ICR conference in Orlando, Florida to discuss the latest consumer trends. That includes NYSE-listed Penske Automotive Group, Tony Pardone, its EVP of Investor Relations and Corporate Business Development, told me how the company's focus on the customer is leading to its success. Check it out.
When you take a look at our business and the brands that we represent, so on the car side, we represent over 40 different vehicle manufacturers. Those brands are just not located in the United States. They're located internationally as well. So we can represent many of the different brands, both in the US, the UK, Germany, Italy, on a strategic basis, and set up our business associated with driving higher returns, customer satisfaction, and convenience to customers in those individual markets. We like investing in the luxury brands, so we have a slant towards premium luxury with our business. For example, our overall premium luxury brand mix is 71% premium luxury. That's BMW, Mercedes, Lexus, Porsche, Audi, those types of brands. So we focus on driving those brands and the satisfaction that comes along with driving those brands higher and faster in the marketplace.
And I understand that customer service is also a huge part of your business. How does that play into Penske's long-term growth?
Yeah, so we look at customer service as two different ways. We look at one, the service to the customer, my services that I provide to you, and then also if you were my colleague or my sitting on the same team with me, the employee satisfaction, what I do on the internal customer. So we strive to exceed the expectations of all of our customers, whether it's internal or external. And we believe that that results in better returns for us because more customers will return to our business to have their vehicle serviced or to have or purchase or lease their next vehicle or commercial truck. One of the things, if you look at our automobile business, on the premium luxury side, there's a lot of leasing that takes place. So consumer leasing, they'll lease the car from us for a 3-year period of time. And if we take great care of them during that ownership experience, they'll come back to us and lease the next one, and we'll create a customer for life. So very, very important to the overall model for our business. The other thing that's important is we invest for success. So you'll go to our facilities and you'll see that we invest a lot of capital in the experience and create a destination location so that we have nice facilities, nice work facilities for our customers or for our employees, but also for our customers to be able to purchase or rest or have the ability to sit and wait while the car's being serviced.
And you mentioned taking great care of your customers. What does that look like in practice?
So it would be things like how you greet them in the service drive, how and where their vehicle is being serviced in the back. So the back of the shop is important as the front of the shop. How we invest in the technicians and the training of the technician or the work environment of the technician, and believe that if the technician is trained and treated the same way as the front of the house is, instead of looking at it as just a dark and dirty place where a vehicle might get serviced, it results in better overall satisfaction to the consumer.
And I feel like so many companies are moving so much further into tech and AI. I'm sure that human connection and having like a human associate at Penske is, important.
Absolutely it is. We invest in technology. We have AI. One of the things that we're doing right now is on the service side, we have invested in service videos. So think about you being a consumer, having your vehicle in for service with us. The technician actually uses their phone to take pictures and videos of the car, and they will text that directly to you. You can see what the technician is talking about. He can recommend services, and then you can approve them right for your phone instead of doing it the old way where you'd have to call back to the store, maybe leave a voicemail, then they would call you back and leave a voicemail, and there's just a lot of phone tag that was taking place. So those are the types of technology that we're implementing that has a big positive influence on customer satisfaction.
You also mentioned that Penske heavily relies on acquisitions. You just made an acquisition of 4 different car companies that will add $1.5 billion of annualized revenue. Can you talk more about those acquisitions?
Right, thank you for that. In November, we acquired 2 Toyota dealerships and 2 Lexus dealerships. The Toyota and Lexus dealership that we acquired in Southern California happened to be the largest in the country. Matter of fact, it is the largest Toyota dealership in the world. When you look at these 4 car dealerships that we bought, 2 in Southern California, 1 in Northern California in the San Jose area, and 1 in the Dallas market. It's called Longo Toyota of Prosper. Those 4 dealerships alone will sell 28,000 cars, contribute $1.5 billion in revenue. So you can think about just the presence and how many vehicles actually go through their business on a daily basis. Our overall revenue as a company is just over $30 billion, so adding $1.5 billion is a significant transaction for us.
And what is next for Penske?
More of the same. I think you will see us continue to drive our business technologically. We will continue to make more investments in technology to drive customer satisfaction and to improve the purchasing process for a consumer. I think you will also see us continue to focus on allocating capital to our shareholders, either through dividends or share repurchases. And one of the other key things is that we spend probably $300 million annually on capital expenditures into our business to reinvest in that experience, to update our facilities to the latest corporate identity standards of a manufacturer. And then I think you'll see and continue to see us grow. We target acquisitions annually, we target same-store growth. So those types of things will help drive our business into the future and help make us even better than we are today.
Thanks, Penske Automotive Group EVP Tony Pordone, for that interview. We're going to have more NYSE Live after this break.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself, it's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry.
To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Last month's Fast Forward 2026 conference in Salt Lake City brought together leaders to collaborate on shaping the future of artificial intelligence. I was on the ground and spoke with several of these leaders, including Vast Data CMO Marianne Budnick, who shares her thoughts on the benefits of the in-person event. Check it out.
In an in-person environment, there's just so much more time for people to expand conversations with folks they normally wouldn't have an opportunity to speak to, whether it be peers within their own vertical industries or folks that are frankly just a little bit outside to learn as different industries are adopting AI at different rates. What's working? What are people learning? How do they share? I think you can't beat in person for that.
So many people I've spoken with today talk about how Vast Data has a culture of innovation. Do you think that's important to have that type of culture in a company that's constantly innovating?
100%. 100%. We innovate in every way, right? Renan is an extraordinary leader, and he pushes us to innovate not just in terms of the technology, but in everything that we do. So even the way we framed this conference this week, we framed it in a way that many people don't, where we really went very broad in terms of the types of different communities that we brought in. We brought in many folks who are competitors with one another and put them in a room and facilitated conversations that don't normally happen at what you would consider traditional conferences. So I think the culture of innovate in absolutely everything is so woven into who Vast is, and just in every facet, where I think really, really proud and pleased with what we're seeing.
Why was now the right time to host this conference?
I think that people are hungry to learn right now and separate what is hype from reality. And there's nothing better than getting people together. We did lots of hands-on labs. We did certifications for people who were saying, I understand, I think I understand the tools, but it would help if I knew just a little bit more how to use, certain applications. So there's a flywheel effect that happens, right? Where bringing people together, showing them what they can do today that is pretty far beyond what people have been trained to think is possible over time, and getting people just very comfortable, again, in a hands-on way, in a supportive environment, has made a huge difference.
And I understand you say that Vast Data doesn't fit into a traditional infrastructure category. Is that a challenge or an advantage?
I think in the early days it was a bit of a challenge, and with certain communities, people will say, well, what category do I plug you into? It's easier for people to think that way. We often say our only competition, frankly, is institutional thinking. When people have been taught to think and careers have been built thinking that infrastructure is deployed in a certain way. And so much is changing in the world now that in the early days it was a little bit of a challenge. It was a lot of education that needed to happen. But now, as people are realizing both how unique we are and how real the capabilities are today, and the incredible value that isn't hypothetical, it's right here and now today, it's a huge advantage.
And you mentioned the AI hype cycle. Do you think we're in an AI hype cycle, or do you think we're in this for the long haul?
Oh, I think this is the absolute most exciting time for, in my long career to be in technology. I don't think it's a hype cycle. I think that notion of the flywheel effect, as the models get better and the tools get better, as AI-powered services become much more commonplace, you have people learning and deploying and learning and deploying, and you just feel the momentum. Again, I've been in the room for the past 3 days with folks who you see the light bulbs going off and people commenting on how, wow, I heard about people doing this. I didn't realize I could do it too. And I think we're going to continue to see, the rate at which, things are changing and improving, I think is going to be commonplace. I think we're going to look back in a couple of years and say, wow, how far the world has come. It's a super exciting time.
Did you learn anything new at Vast Data?
I've learned lots of new things at Vast Data. Brennan talks about the art of possible, right? Anything is possible and pushes us all the time to think of what we can do that's new and different. And the amount of things I've learned that's new at Vast Data is just probably too long of a list. But mostly what I've learned is just the power of, you asked a question about culture of innovation, the importance of culture, I would say, the importance of bringing together groups of people who really challenge each other in ways that I have not seen in my long career. And I've worked for some pretty incredible companies. So what I've really learned more than anything that's impactful is how to drive each other, how to continue to raise the bar, how to never take no for an answer, how to not even think about the word impossible. Everything is possible. And couldn't be happier or more pleased.
Thanks, Vast Data CMO Marion Budnick, for that interview. We're going to have more NYSE Live after this break.
New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. Today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. The NYSE has been going strong for over 233 years, and it's going to turn 234 years old this May. Let's take a look at one piece of the exchange's storied history.
Although the New York Stock Exchange was founded in 1792, it took more than 70 years for the budding exchange to purchase property. The New York Stock Exchange opened the doors of its first permanent building in 1865, and we've been right here on the corner of Wall and Broad ever since. That structure was demolished to build our current home on 12 Broad Street, but a few pieces of the old stock exchange were preserved, including this glorious walnut wall clock. This clock was custom built for the New York Stock Exchange and made right here in the great city of New York. The mechanism was completed in 1865, and when the cabinetry was completed in 1867, it was ready for action. The clock came from the shop of William F. Ladd, whose signature is visible on the pendulum calibration plate. This regulator clock runs on a movement using a pendulum and gears, and was far more accurate than other contemporary styles of timepiece. Regulator clocks were initially used in astronomical observatories and clock shops, or anywhere that required immense precision. Most clocks of this era would easily become inaccurate due to heat and friction, but the New York Stock Exchange boardroom clock was built to minimize time drift and ensure that the NYSE's marketplace ran smoothly and accurately. Its innovative design utilizes a liquid-filled pendulum, which is better able to compensate for the changes in temperature. This clock was built for such precision because it was used to measure trading windows when the New York Stock Exchange operated as a call market. Securities were traded one at a time, in increments of 5 minutes each. The time of day didn't matter as much as which trading window one was in, hence the unusual choice of clock face. At the end of each trading window, the president of the exchange would bang a gavel to signify that the trading of a particular security is over, and the time has come to move on to the next one. That is why, even today, when the closing bell is rung at the New York Stock Exchange to close the markets, we still bang a gavel to signify the end of trading securities. Today, the companies that list their stock on the New York Stock Exchange are as diverse as they are numerous. Some of the bank, railroad, and utility companies that listed their securities in the 19th century are still listed with us today, and they are now joined by companies in such varied industries as aviation, outerwear, biotechnology, innerwear, data security, footwear, cloud computing, and maquillage, just to name a few. The clock was first installed on the old trading floor in 1867, but by 1871, the New York Stock Exchange had by necessity adopted a groundbreaking new market model. The second industrial revolution was picking up steam on the heels of the first, mechanizing the world and fundamentally changing the way we live our lives. The wealth and population of industrializing nations increased at a breakneck speed, and what fed this growing and globalizing world economy was capital. Inventors, entrepreneurs, and governments needed funds in order to realize their visions, and naturally turned to capital markets to raise said funds. One of the inventions of the technological revolution that inexorably changed the way that all securities exchanges operate was the stock ticker, invented by Edward Callahan the same year as the New York Stock Exchange clock was completed, 1867. Brokers, businessmen, and anybody else invested in financial markets now had access to continuously updated stock prices and could make decisions accordingly. As a result of these changes, more companies and governments listed their securities on the New York Stock Exchange, trading volume increased, and the quotation book grew from 30 securities up to 300. Under the call market model of trading securities in 5-minute increments, the New York Stock Exchange was facing the prospect of a 25-hour trading day. Thus, in 1871, only 4 years after this clock began its work, it became obsolete, as the New York Stock Exchange became a continuous marketplace for the first time. The New York Stock Exchange pioneered this market model, employing specialists operating as points of sale alongside brokers in an open outcry format. The specialist and broker market model was adopted by exchanges worldwide and continued to be industry standard for decades. But today, all but one has closed its trading floor. When this clock was being utilized, there were about 30 securities listed in the New York Stock Exchange quotation book. Today, the NYSE trades 8,000 securities, including over 2,300 listed domestic and international issuers and 70% of S&P 500 companies. Of course, far more has changed here at the New York Stock Exchange and more broadly in our markets than the number of listed companies. 150 years after the New York Stock Exchange first became a continuous marketplace, today we can look back over a century and a half of evolution that has ushered in countless technological innovations that have increased efficiency to an astronomical degree. In the 1800s, when the New York Stock Exchange operated as a call market, in 5 minutes, one loan security was traded, with no guarantee that even a single transaction would take place in that allotted time. Today, in the span of 5 minutes, our industry-leading technology is capable of processing over 1 billion messages. Each message is processed reliably at lightning-fast speeds in about 1/10,000th of the time it takes to blink your eye. Back in the 19th century, the amount of money that changed hands in the space of 5 minutes ranged from $0 to several hundred. Today, our peak notional exchanging hands in a 5-minute window is more than $150 billion, counting equities alone. Today, across our 5 equity and 2 options exchanges, we continue to see ever-increasing demand, resulting in 5-minute peaks of over 2 million individual trades where 3 billion shares traded hands across 18,000 different listed equity and option securities. Time is immutable. Time cannot be rejected or escaped, but it can certainly be measured. Nowhere is the measure of time more imperative than in a securities exchange. For 157 years, this clock has been diligently ticking away, keeping time in the home of the epicenter of global capital markets, the New York Stock Exchange.
Thank you, Anna Mello, for that segment. We're going to have more NYSE Live after this break.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, We honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. Joining me now for the first time on Zoom is Jay Woods. He's the Chief Market Strategist at Freedom Capital Markets. Jay, welcome to NYSE Live virtually.
Yeah, you caught me in my home where I like to wear a jacket and tie all the time, but I dress up to represent when I get to talk to you.
Love the background, very appropriate. We are going to hear Janus Living. They're going to ring the opening bell in just a few minutes, but of course, it doesn't mean that they're going public right away. Can you describe the price discovery process during an IPO at the New York Stock Exchange?
Oh, that's where the magic happens. That's when it's fun. The bell rings, but we don't open that stock right away because of price discovery. So brokers will gather around the market maker that trades the stock and, give their areas of interest. The broker will also be getting orders through the machine, through his terminal, and get levels of where buyers and sellers are. And then that level will slowly grow tighter and narrower when they finally find that equilibrium. And if it's, oversubscribed and there's strong demand, the stock will go higher. And, if not, the market maker will be there to support it with the banking team and will price it at where the market deems the correct value. So it's always exciting. It's a little stressful as a former market maker, but the company is crossing the finish line and just starting its new journey. And as New York Stock Exchange market maker, as the exchange celebrates this day, it's pretty epic, and it's the beginning of the next journey in their discovery.
About a minute away from the bell. In just a moment, can you tell us a little bit about the IPO market in 2026? What have we seen so far, and what do you think we're going to see for the rest of the year?
Yeah, it started off okay the first few weeks, but it's a little sluggish given market conditions. I expect once we get through this turmoil, now that we're through earnings season, the market can stabilize.
All right, we are having a technical difficulty, but we are just moments away from the bell. We are going to go to that opening bell. Janus Living celebrating its IPO. Take a look. You just saw Scott Brinker ring the opening bell. It is always an extra exciting morning at the New York Stock Exchange when a company rings the opening bell before their IPO. We are going to bring back Jay Woods, Chief Market Strategist at Freedom Capital Markets. Jay, welcome back.
It's good to be back. I hope you can hear me.
Now, so markets are opening. What are you going to be looking at most closely in this session?
Yeah, well, yesterday was the first time the market closed on this sell-off below the 200-day moving average. What does that mean? It made a lot of headlines. We were above this average, the average price over the last 200 days. We were above it, which means the market's very healthy. For 214 consecutive days. We've had 28 streaks in our history going back to 1950 for the S&P where we've stayed above that. And now when we cross it, it has algo traders selling stock. It causes a little angst. But when you go back in time and examine it, the next 10 days are critical. 71% of the time, we've only spent 10 days or less below that mark. We've had a drawdown as much as 3%. The drawdown was weak yesterday, so I'm watching the October low, the November low, which comes in at 65.40, 65.50, a little lower than where we are now to see if we can hold. If we can recapture that 200-day moving average, that's a very strong sign. This washout that we've been expecting, not as dramatic as we thought, even though the headlines have been rather dramatic. And maybe, just maybe, the worst is behind us and we can start to trend a little higher because the first 3 months, S&P 500, it's only down 3.5%, but it feels like it's a lot more. So now that we've gotten this negative milestone behind us, we want to recapture that average. So a lot of traders, especially the ones behind you, will be watching that very closely over the coming days because we want to get back above that guide of health to say that, hey, the market's okay. We've withstood a few turbulent times, but earnings growth continues to be there. And we're going to get back on that positive track going forward into the end of the year.
And options are expiring tomorrow. What is the significance of that, Jay?
Yeah, today's what we call a quad witch on the floor of the New York Stock Exchange. So options are expiring. It's a very heavy volume day. And we're getting an S&P rebalance. We have 4 new additions to the S&P 500. They go in officially with today's closing price and open for trading in the index on Monday. Those are Vertiv, Lumentum, Coherent, and EchoStar. Out are stocks that you may not know: FMC, Celanese, Teleflex, Borg Warner. They've been in the index for quite some time, but the index rebalances, and when it does, it becomes a volume event. And now the index is hopefully getting healthier, putting stronger names in and taking names that have been, have fallen out of favor. Great companies still, but they're not worthy of being in that top 500. So you're going to get volume as people pour into these names on the rebalance. So you're going to see a surge in volume. And if price action moves dramatically up or down, it may get people thinking that, hey, because of this volume, there is actually, significance to the move. I would pull back on that one, but let's see how the day shakes out. We're opening a little lower as we speak, but we have a long way to go in the trading day before we get through the end of this week.
And Jay, we're seeing oil prices continue to impact equities. How are you evaluating the situation in the Middle East from a market's perspective?
Yeah, it's the trickiest part because, we talk about uncertainty. We don't know what's going to happen overnight. Oil remains higher for longer now, still in the high 90s. This will become problematic if it stays this way. The one thing we can't have is another spike above 100 and then stabilize up there. Usually oil spikes are short-lived. The fear is if this ongoing conflict continues and we get higher for longer, that is going to have a deep impact on the economy. We saw PPI, inflationary numbers, spike up unexpectedly, and this is before oil became a factor. So there are strong concerns that if this is not transitory, if this is a long-going problem, it will have a deeper impact on the markets. And, this 3.5% sell-off will be something that we look back on and wish for because it could get deeper if this goes on longer.
And Jay, the Fed announced it was holding interest rates steady earlier this week. And we understand you see markets talking more about Fed Chair Powell than actual policy. Can you speak into that for us?
Yeah, the Fed has taken a dramatic shift that not many people like. The headline writers love it. But what Jerome Powell did at the press conference is he didn't really focus on oil or rates right away and their decision to keep things on hold. He talked about him staying on as long as this litigation is ongoing against him. So we have one more meeting with Jerome Powell. His term ends May 15th, and then it's supposed to transition to Kevin Warsh if he's approved. And now we have a hearing that may not happen because people that are voting on the banking committee won't have any hearings while there's ongoing litigation against Powell. And the president doubled down with his DOJ attack dog, Jeanine Pirro, saying, no, we're going to fight this. Even though you wouldn't let us subpoena these records, we're going to go to a higher authority. And that could take time. And as a result, Jerome Powell is going to stay on as long as needed. And that could be a thorn in the side and cause some angst between the White House and the Fed. But that's drama. What really matters, they held rates, and it looks like we still may have one cut baked in, but he really didn't address the situation at hand because it's too speculative. He doesn't know, and with one meeting left, he doesn't need to go into those waters. He'll let the data do the talking. So when he meets at that final meeting, hopefully the litigation's behind him. We have a nice transition. There's no more drama. And then we can get back to brass tacks, which is focusing on the economy and the direction of rates, which will be stable at least for the next 3 to 4 months.
In our last 30 seconds, inflation is one part of the Fed's dual mandate. And with this week's hotter than expected PPI data, do you foresee that having an impact on Fed policy moving forward?
Oh, without a doubt, because the PPI then leads into the CPI, the consumer side of the equation. And it's the consumer, one, the gas tax, it's not a tax, but gas prices going up is the biggest tax on the American consumer. And then you'll see spending habits change. It's very fascinating to watch a stock like FedEx and watch some of these transports, United Airlines, or it was Delta Airlines, guided higher, FedEx guided higher. These are some areas where the consumer may pull back. So we're getting good news now, but it's not about right now. It's about what happens 6 months, 9 months, 12 months from now. And this current situation could have deep ramifications on earnings growth and the trajectory of the economy. So let's hope that this is short-lived, but it doesn't seem like there's an easy exit. And it's not like we can just plug a hole in it. Okay, and that situation's done. So there are a lot of concerns. So oil is driving the bus right now. And if we can get that to get under 90 and stabilize a little lower than where we are, I don't think we're going back to $60 crude anytime soon. But if we can get into that mid-70s range, that can ease some fears going forward. So we're constantly watching news out of the Gulf region, especially the Strait of Hormuz, and that will dictate a lot of things on the economic front over the next 3 to 6 months.
For the first time on Zoom, Jay Woods, Chief Market Strategist at Freedom Capital Markets. Thank you for joining us on NYSE Live. I'll
see you live soon.
We'll see you soon. Coming up, tax day is just weeks away. The national tax leader from NYSE-listed CBiz is going to tell us what questions his clients are asking and how he's helping them navigate the new rules. Stay tuned.
So honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Tax season is in full swing ahead, but it's not just consumers who are dotting their I's and crossing their T's. Businesses are also looking for a way to navigate the newest tax rules, such as those outlined in the One Big Beautiful Bill. NYSE listed CBiz is helping businesses with their biggest tax questions. And joining me now to talk more about it is Joe Perry, CBiz's national tax leader. Joe, welcome to NYSE Live.
Thank you for having me. This is a pleasure
to have you. What are the biggest changes taxpayers and your clients are navigating this season, especially with new provisions like the One Big Beautiful Bill coming into play?
Yeah, I would say the benefit that our clients had and accountants had was that the law was passed in the middle of last year, which gave a lot of planning for us to do for our clients. So CBiz took the initiative of having webinars and communicated to clients so that way they were aware during tax time. Some of the provisions on the individual side relate to no tax on tipping, no tax on overtime, as well as the SALT deduction go from $10,000 to $40,000. Some of those are great for those that are not wealthy because those benefits get lifted. On the corporate side, there's some huge benefits that we're able to take advantage of planning with our clients. And that's the 179 deduction, bonus depreciation, and R&D. R&D, many companies, and actually affected earnings per share. Many companies had to actually capitalize their expenditures for R&D. By allowing them to expense it and take the R&D credit, it really helped many of our clients, which was really effective.
What are some of the most common tax questions that you're hearing from businesses this year?
Well, it's pretty interesting because when they ask questions, they have the answers thanks to AI. Never faced that before. So, and they're also more they're more apt to ask the right questions too. So sometimes AI isn't right, as we know, but they're wondering how to reduce their taxes. That's always the main benefit that they want. The interplay between some of the provisions, right? So somebody would ask, well, you have 179 deduction and you have bonus depreciation. Why would you take the both? You could expense an asset that you purchase. And state plays into that. To the extent that you have bonus depreciation, many states don't allow you to expense that. So if you could take 179 versus bonus depreciation, you benefit. So we try to look at that. And then there's the misunderstanding of tips and wages, even for restaurant owners. Many of the high-end restaurants, those tips and overtime that's not taxable really doesn't apply to their workers because of their income that they make. They don't make the threshold of $150,000 as an individual, or if you're married filing joint, $300,000 of adjusted gross income.
How do tax considerations for businesses differ from those of individual taxpayers like me or you?
Yeah, it's pretty interesting because many middle market companies and individuals, they intertwine their businesses and their individuals. So I think, when it's an individual like you care about the money and the cash flow you put in your pocket. So that's what they're focused on in individuals. So it's a shorter horizon for the most part, where it should be a longer planning opportunity, especially as it relates to where your investments are held. That's where you could really add value, whether it's tax exempt often we see clients holding their tax exempt in or something that's non-taxable in a retirement plan, which doesn't make sense. So you have to align with your brokers and your attorneys to make sure you're maximizing your rate of return.
CBIZ also works closely with private clients. What challenges are they turning over to you to help solve?
Yeah, it runs the gamut, especially in our private client services group. Many times we're working with the family, and each family has different dynamics. So we're not just trying to solve the tax problems. Many times we're like their family office, not from an investment side, but from a reporting side to make sure they're making the best decisions. So to get those dynamics right and be able to plan to reduce taxes, sometimes there's a dichotomy as to what one individual may have in a family dynamic versus another. So we try to bridge that together to optimize their tax savings and pay the least amount of taxes possible.
As people are gathering their documents right now, what should they be especially mindful of?
Yeah, that's a great question. The good news is, as I said before, the tax law changed in the middle of the year, so people have been reading about it. So they probably do have some knowledge, but you should start with your prior year's tax return. You really should understand what you're thinking about for 2026, so that way you can start planning for this year as well. And the last is, when you get your return, you should see if you owe too much, in which case you have to adjust your withholdings or pay estimated taxes, or you got too much of a refund. The W-4 has been updated to contemplate changes in the law, and I think too many people really haven't revisited that, so I would recommend that they do that and speak with their accountants to make sure they're properly withheld so they don't get surprises at the end of the year. Nobody likes surprises, as we know.
Joe Perry, CBIZ's national tax leader, for joining us on NYSE Live.
Thanks for having me.
We're going to have more on the markets after the break.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Fintech firm Upgrade just launched Boost Money. It's a mobile banking product aimed at helping consumers access cash, build credit, and grow savings. Joining me now to share more is Renaud Laplanche, co-founder and CEO of Upgrade. Renaud, welcome to NYSE Live.
Thank you for having me.
What is Boost Money?
Boost Money is a new product we just launched, part of our mobile banking suite. and it really gives our customers access to sort of cash up to $500 of cash advance, free of charge, which we think is particularly helpful in those times when sort of a lot of consumers don't necessarily get paid every 2 weeks, and then their income can vary from month to month. Having access to this sort of emergency cash advance can be very helpful. And at the same time, it has some sort of credit building features and also access to a 10% sort of APY on savings. So when they have additional cash, they can save and earn on those savings.
All right, and how does it differ from traditional checkings and savings accounts that consumers already use?
Yeah, so I think that combination of cash advance that really gives you access to the resources you need right away, but also building your credit over time and putting you in that, setting you in the right direction for the future, and sort of access to, again, 10% APY, which you really don't see every day, really set our customers well for so the immediate needs, also set them well for the future, and helps form good habits in terms of taking advantage of this savings account and really sort of getting ahead and planning for the future. So I think it's a very unique combination of the things you need right away, but also setting you up well in the long run.
You say it helps build good habits. Can you speak into that a little bit more? How so?
So it's particularly difficult for people who sort of live day to day, paycheck to paycheck. It's hard to sort of build that muscle of saving for the future, because that's really not the mindset you are. You have emergency expenses. I need to pay for gas with gas prices going up. So there are immediate needs. So it's hard to go in that mindset of savings for the long run and really getting ahead. But it's a good habit to have. So as their income fluctuates, they might have sort of cash needs this week, but will have $200 of extra cash next week. So having that very high APY on savings account is really a strong incentive to save these $200, build good habits that way, and really try to get ahead and not live paycheck to paycheck anymore.
And I understand Boost Money offers both a free tier and a paid subscription. Who is each option designed for, and what do customers gain by upgrading?
Yeah, so a lot of consumers are expected to start with a free product. It gives you cash advance, which is sort of one of the main sort of draws for the product. Cash advance up to $500, and the credit building features that again help sort of move your credit and your finances in the right direction. And then there's a paying tier, which is $9.99 a month. Which gives you so a little bit more cash advance, sort of access to these advances faster, and also features that sort of 10% APY savings rate.
And you say this is your answer to the, quote, K-shaped economy. How so?
I mean, we're seeing it play out across the board. We have 7.5 million customers. Most of our customers are in the sort of category of prime consumers. About 80% are prime. And we're seeing their sort of credit performance and everything playing out fine. And we have about 20% of our customers who are in the near prime category, and we're seeing their situation being difficult, and a lot of those customers having, again, access or needing access to emergency cash from time to time, not having very stable income, and their situation either getting worse or not getting better.
And how does Boost Money help customers build credit over time?
Right, so Boost Money comes with a card that you spend on, and it's the balance on the card gets reported to the credit bureau. So as long as you sort of use the card, pay it back on a regular basis, that really helps build your credit, which is great, because that really sort of helps you move in the right direction and help you sort of access sort of longer-term credit features. So you're not we don't want our customers to be stuck in a sort of short-term cash advance, living paycheck to paycheck kind of scenario. We want them to be able to plan for the long run, and building their credit is really a great way to do that.
Great. Thank you, Renaud Laplanche, co-founder and CEO of Upgrade, for joining us on NYSE Live.
Thank you.
And we are almost 30 minutes into the session. Stocks fractionally lower. Joining me now to break it all down is Eric Crisogolo. He is the market strategist for the New York Stock Exchange. Eric, welcome. Eric, what are you looking at most closely as we begin today's session?
Obviously, we're under pressure right now. One of the big things that we saw, especially yesterday, was that a huge spike in global yields, especially in Europe, but also in the U.S. Kind of a wild ride with the Treasury yield. So, that is kind of adding to the pressure from oil that we've been under for a little bit now. So the price in oil plus now the yields moving, much higher. That's kind of what we're focusing on right now. On top of everything, it's a big triple witching options expiration day today. Huge amount of options are kind of expiring. They're going to roll into new options. Positions are going to be closed. So there's going to be a lot more of trading flow around all of that movement.
What do we usually see when options are expiring? You're saying you're going to be seeing more trading flow. Can you speak into that in our last minute together?
Yeah, so, options, the dealers that sell the options, right, they want to hedge their positions. So for a while they've been, hedging the stock movements up and down. As everything kind of converges onto one day, all those kind of hedges need to be re-hedged, moved around as the options holders either close their position or roll them to new hedges. So everything just kind of gets rebalanced. There's a reshuffling, and then everything underneath to hedge those positions, all the trading in the actual equities, that's all taking place right now to kind of rebalance everything that was occurring, up into this day.
All right, Eric Crisogolo, market strategist for the New York Stock Exchange. Thank you so much for joining us on NYSE Live.
It was my pleasure. Have a great weekend.
You too. That is going to do it for today's coverage on NYSE Live. You can check out our show on any of the streaming apps at the bottom of your screen. Remember, we had an IPO today, Janus Living. I have not heard that first trade bell yet, but once it rings, it will be public. I'm Ashley Mastronardi. Have a great day.
Welcome to the public market.
The New York Stock Exchange is the cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?